All right, good Tuesday morning, everybody. It is bright and early, six o'clock Tuesday morning. The day before we get the consumer price index data for the month of August, of course, and then we have the producer price index also out this week with monthly retail sales. It's a pretty important week here so far as economic data is concerned, and what will prove the next catalyst for the broader markets. So welcome to this week's video. As usual, I am your host, Seth Golden. What you're looking at now is a screenshot here from within our macro market research report that was issued Sunday to Finom Group members. As usual, if you are not a Finom Group member, if you do not receive directly every Sunday our macro market research reports, won't you consider a contributor membership so that you can receive our macro market research reports each week. If you like our trade ideas, our investment ideas as well, delivered in real time, you can join our premium memberships also, $59.99. Probably the best value in the market, but I'm biased, so see for yourselves. If you do like our content, if you like our video, feel free to hit that subscribe button here on YouTube and share the video as well in your social media groups, maybe with friends, families. We greatly appreciate that at Finom Group. So without any further ado, what I'd like to dive deeper into is something that was inside our macro market research report this weekend. There's two key data points here that may hold the key to the monthly return performance for the S&P 500. Oftentimes, when I see these quantitative data sets, these studies on social media, or just in my own research, I see the numbers, they kind of dance around in my head, and sometimes a chart will join in as a picture if I'm familiar with the year or the annual performance of the S&P 500 or the NASDAQ that year. And it'll force upon me to go and do some additional due diligence. Quantitative data, which is a lot of the works that you'll find at phenomgroup.com. Quantitative data analysis is a good way of removing a lot of the noise that surrounds maybe fundamental analysis and even technical analysis. A lot of people are of the opinion, well, technical analysis is black and white. If it were that simple, we'd all look at the same charts. We'd all execute the same trade, so on and so forth. With most data, whether it's fundamental or technical, we are bringing a certain degree of bias or prejudgments to that chart, to that 10K quarterly filing, to that conference call transcript for the company that we are invested in. Quantitative data is truly black and white. Based on this set of criterion in the past, this is what has happened going forward. So with that said, here are the two key data points and studies that we researched and further analyzed over the weekend. Here in the month of September, and for those of you who have watched our videos in the past, you might recall this particular study on the NASDAQ with these three past circumstances, these patterns in the NASDAQ where we've had a really strong year-to-date performance coming off of a really bad year. Right? The NASDAQ fell more than 20% below its 200-day moving average and then gained 20% above its 200-day moving average. Our sample size was very small in the past, only 3 such occurrences prior to this year. Again, this is data that we're looking at each and every week to see if we can find patterns and possibly the keys to the market going forward. There's usually never one data set that will, give you an absolute 100% this is what's going to happen next. So we're always looking at a wide variety of studies and data sets. There's never one key. There's a multitude of keys to the market, so to speak. So this is a study that was performed by Fundstrat, their chief equity strategist and founder, Tom Lee. And what it recognizes is that we expect a strong September, given the August was a down month. We had a negative return in August, but still by the end of the month, the year-to-date 2023 performance found the S&P 500 up still greater than 15%. So our criterion, a down August, but a year-to-date performance at the end of August, the S&P 500 up more than 15%. Now, when you've had that criterion going back to 1954, the S&P 500 was only down, had a negative return in the month of September one time. Notably, there's only 7 prior examples before this calendar year, but only one of those was the market low, and that was 1975. If we think about 1975, going into July, or I should say, I'm sorry, going into August, in 1975, the market was up some 30+%. I mean, almost double what our S&P 500 had done through July in 2023. So it would serve to figure at some point in time, the market would have a pause in 1975. I mean, that is a very extended rally in both time as well as magnitude. But that is the one outlier. Again, down August, up 15% at least year to date. So it serves to figure that using just this data set alone, we have a high probability that the S&P 500 will be positive in the month of September. That's just one data set. And we've already started off on the wrong foot, so to speak, for the month of September, down a little more than 1% in the first trading week. And this may be the key here, right? One trading week in the books for the month of September, we're still down a little more than 1%. So we scroll through our macro market research report, and you can see a lot of data, a lot of charts. We do a lot of analysis to give us the best weight of the evidence approach to each and every week as active portfolio managers. All right, so here's another one. And this is also the benefit of having a subscription to our weekly research content, is that you can go all the way back through our archives, pull up research reports from 2017, 2018, month by month by month. And you can retrieve the data that might be similar to this calendar year. And what I found was we had talked about just last year this study from Quantifiable Edges. Really good account. Check them out on Twitter. In this particular study, the criterion that happened for this study is today is the 3rd Friday in September. Most of you that are familiar with options, you know what the 3rd Friday of any calendar month is, right? That's monthly options expiration week, happening on the 3rd Friday of the month. This study is for the 3rd Friday in September. That's one criterion. The second criterion, the S&P 500 closes down for at least the 2nd week in a row. What is the next week's forward return? Because typically, that week after September's monthly options expiration week is the absolute worst week for the S&P 500 of the entire calendar year. It's called the weakest week, the last week of September. So again, the criterion, 3rd Friday in September, monthly options expiration, you've gone into and through that week with at least consecutive weekly declines. The next week, the weakest week in September, after these criterion, The market has only been up in the weakest week of September one time if it's had at least a consecutive weekly decline. So let's think about where we are in the calendar year. The first week was already a down week. This week happens to be monthly options expiration week, the third Friday in the month. If this week is another down week, historically, the following week doesn't look like a good probability that the market will be higher. Only one time in the past had it been higher. With that being said, why was 1989 the outlier? So we looked at 1989's chart, and this is what we found. Looks a lot like this year, right? The chart above is, the 1989 year-to-date performance up to the third Friday of September and going into the weakest week of September. The gain year-to-date for the 1989 through that Friday was 24.25%. In other words, strength begets strength, right? And this is one heck of a long-term uptrend with that 50-day moving average proving, nice support. A little bit below here and a little bit below there, but in general, very good support. Now, in 2021, we had a similar setup, and as we do, in 1989, we had a similar setup. Unfortunately, we did have 2 consecutive weeks where the market was down into the worst week, and in 2021, it failed. The S&P 500 was down in that worst week. So even if you have a strong return like we did in 1989, and we did here in 2021, it's not necessarily the difference maker. Unfortunately, strength begets strength until it doesn't. So with that being said, all right. So we're examining these 2 studies, the one from Quantifiable Edges. So which is it going to be, right? Is it going to be the one from Fundstrat where we had a down August, but we were up more than 15% year to date? Or is it going to be this one for Quantifiable Edges if we go into the worst week, the weakest week, with a 2-week, at least a 2-week decline, which means this week is pivotal, right? This week is very critical to how the whole month the S&P 500 might perform. We essentially have the keys to unlocking whether or not this September is going to be a down month or not, based on this current week, because we've already had one down week. If we have another down week, so consecutive weekly declines, more than likely it's not looking too good, right? So here's the thing, and this is where it gets back to numbers dancing in my head. Funny, so my wife has learned not to ask me mathematical questions, statistical questions. The last time she did it, in fact, we were at the supermarket and she was trying to, calculate how much of those beans at the those grounds at the in the coffee aisle per bag, per ounce. And she asked me, and I go, I'm doing this. And she's like, she hits my hand away. She's like, don't do it. You look like a crazy person. Never mind. I'll do it myself. Because that's just, how my mind works. I can see the numbers in my head, but I need to touch them. I think I'm touching them. It's really thin air, obviously. Hence, you look like a crazy person. So she doesn't ask me those things anymore. With that being said, this is how my mind works. This screenshot here essentially pins both of these studies next to each other. And so, when these were in my head, I'm like, I see the dates and I'm like, wait a second. And that's what stood out to me the most. And that's what helped me to realize This is the most critical week for the S&P 500. It will determine the monthly returns for September, this particular week. Why? Well, let's look at the dates here, folks. Again, this study from Fundstrat, very strong and a down August. This one from Quantifiable Edges, at least a 2-week decline going into the weakest week of September. And what is the weakest week of the year? Notice anything about the dates: 1960, 61, 71, 72, 85, 89, so on. So look at the dates closely. Get them in your head. Now scan over here to the Fundstrat study. Smaller sample size. None of the dates match. For these occurrences, they never happened here. For these, it never happened here. So it's going to be one or the other, and it's going to be determined this week. If the S&P manages a positive performance, more than likely, this study will reign supreme and deliver the positive outcome. If the market is down this week, this study will reign supreme and more than likely deliver a negative monthly return for the S&P 500 for back-to-back months. It will bring about questions so far as the year-to-date rally and the remainder of the year plays out. You will get a lot of headlines. I'm of the opinion you lean in favor of the optimistic view. One more study, folks. This we released to Finom Group members, and this study is from the Sentiment Trader. This is the VIX. The VIX had a close below 14 for the month of August. Again, very rare, because typically August begins the seasonally strong period for volatility or for the VIX. A lot of samples here going back to 1992. But when the VIX finishes below 14 in the month of August, historically, 1 month later, the S&P 500 has a median return of 2%, and it was only delivered a negative return one time. 9 sample sizes here. Only one time did the S&P 500 deliver a negative return 1 month later. Again, none of these dates match. So this week will determine what happens for the S&P 500 in the month of September. Positive return, negative return. Again, if you like this kind of analysis, you want to get it in real time so you can consider it over the weekend. And when that first trading day of the week, starts, maybe there's some positions you want to put on. Join us, subscribe to Finom Group, get this data, get this analysis in real time. Take care, everybody. Have a great trading week. We'll see you next time.